We were just talking as we went into a break about the sustainability of the U.S. recovery. You believe that it is. No matter what you read into the possible inverting of the yield curve or the 10-year Treasury going above 3%, you still think this is a long-term sustainable recovery?
Well, I know. So someone asked me once about what's the odds of a recession. I said it's 100%. But the question is when, and right now the American economy in a very broad-based way is strong. More people going back to work, household formation is going up, houses in short supply, which is a plus for the economy. The capital markets are wide open. There's much less leverage in the financial system than the past. And I disagree when people say it looks like '07. Banks have twice the capital, twice the liquidity. The consumer balance sheet's in very good shape. So America looks pretty good. But the way to look at the recovery is look beyond a year. We've had 20% growth over 9 years.
Yeah.
And the 9 years is really good. The 20% is really bad. Yeah. It should have been 40% over a shorter time period. And that is part of the reason why wages didn't go up and all these various things. So it looks like this may have legs to go. Maybe a year, maybe two, maybe more. Just because other things happen a certain way, it won't happen exactly the same way. So no, and remember, and the rest of the world's also doing better. Japan, 1.5%. Brazil, -4 to +2. Europe, 1.5 or approximately. And
is Japan getting out of its funk?
I don't know, but it's 1.5%.
Yeah.
A year for the last 10 years, it was 0. So that's a positive, I hope it'll continue, but the fact is, all I'm saying is America's in pretty good shape, and then you've got some benefit of regulatory reform, some benefit of tax reform. And I think those things will drive growth a little bit, and hopefully better than 2%.
Now, I read your note to clients in April after the quarterly earnings. You said one of the biggest risks is underestimating the ability or the potential of the Fed raising rates more aggressively.
Yeah.
Inflation could rear its head. We just had oil above $70. Yeah. I mean, is this a worry?
I'm trying to explain to my shareholders that you got to prepare for all possibilities and probabilities. So there is a possibility that growth accelerates, that inflation accelerates. It's higher than you expect. The Fed raises rates a little bit more than you expect, both in the short end, in which, in my opinion, might force the 10-year up, not down like in the past. And so you can easily deal with 4% bonds. Mm-hmm. And I think people should be prepared for that. Again, if it's because America is strong and healthy, I would call it almost more like normalization. The other thing I pointed out is by the end of the year, the government in total, the Fed plus the deficit, we have to finance $400 billion a quarter. Mm-hmm. That's a lot. That's a huge shift from the past, and eventually the other central banks of the world will reverse their buying of bonds, and those things may cause more volatility, higher rates, in a way we don't fully understand because we never had QE, we've never had the reversal.
Yeah.
But again, as long as the world growing is more important than that. Okay, and so I always try to keep a view on both. The financial markets are one thing; they fluctuate, they move, rates go up or down. Commodity prices go up or down, but what matters to most of the world, including the governments, is jobs, wages, stability in the economy, not necessarily in the markets.
Speaking of the bond market, let's talk about the Chinese bond market. They have made strides to opening up the $10 trillion bond market to foreign investors. They also recently started oil futures trading in yuan. With moves like this, when do you see the renminbi taking a much larger, if not a comparable role internationally with the dollar?
I think the way you should look at it is that eventually it will be comparable. Eventually it's 20 or 30 years. It's not comparable if it's not convertible. Right. So being part of the SDR, being MSI, these are small adjustments and they're good. I applaud the Chinese for doing it. But until you can buy and sell securities freely, if you have a U.S. dollar, you can buy and sell securities freely, then that's a big thing. They're on the path. But that's really related to the whole economy and opening up, not just these moves, et cetera. And the bond market is critical. If you want a healthy financial system, you need healthy bond markets. A lot of the bonds now are government or state-owned enterprise, which are effectively government guaranteed. Right. But you need around real bonds or real companies, transparency, governance, collateral rules, rule of law, open trading, proper research, proper credit agencies, all these things which create a really healthy bond market. And again, they're on the way, but they still have quite a way to go.
Now, they're also on the way to the MSCI Emerging Markets Index for the stocks. A shares could be included.
In a very small way.
Very limited, 232,
because
222?
They can't do it in full size because they don't allow people to buy the stocks in that size. So,
how are the flows going to be?
It'll be a plus. But again, I put that as a very minor adjustment. It's a nice thing. It gets the world more educated about China. But in terms of actual dollar amount, it's not. I think it was 5%. Yeah. And I've got the estimate of how much money that might be. It's not going to be earth-shattering to China or to anybody else.
But again,
because it's the MSCI, everyone who studies the MSCI is going to be studying China. I think that's a very good plus for China. eventually to make it the full share of stock, and where it's, I think the stock market is 30% the size of America's or something like that, they're going to have a convertible currency. That's quite a ways away.
What else keeps you up at night? Cybersecurity, you called it in your note to the clients, an arms race. How big of a threat is that?
It's the biggest risk facing the financial system in the world. I beg my regulators, we got to be forward-looking. It's got to become part of trade. It's got to become part of what I call geopolitics. Like, what are you allowed to do? Think of maritime law, aviation law. Very strict rules. The countries have courts and responsibilities. That there be no retaliation. But what we have today is not sustainable for the long run. And people like JPMorgan, we spend $700 million a year. I think we're very protected. But the system itself in total is not. And governments have to get their hand behind this, all of them. This won't be just one government. It'll be, you kind of need a convention of cyber to get everyone on the same page.
And the other side of the coin on that is legal data leaking. If you want to take Facebook and Cambridge Analytica as an issue, you have tons of client data. Is there ever a point where you look at ways to monetize that, or is the protection?
No, we don't monetize client data. We use it for our own risk, fraud, marketing, but it doesn't go outside of the bank. And this is a huge issue, and it's not a Facebook issue. It's just an issue about data, the amount that's bought, sold, collected, stored, used. Very often you use an app or you agree to the I agree button, you don't realize you agree that they can sell that data to anyone they want. So it's all over the place, and I think consumers, individuals are going to have the right, and government's going to ask for some rights to protect that. Europe is probably ahead of everybody else. Yeah. And banks, even when you give your bank passcode, you've given the right to those people to take that data too, which I think is a mistake. It doesn't protect you. It doesn't protect the bank. So we're working in a friendly way with people like Intuit and other people to say, if the customer agrees to send the data, what are they sending? Do they know they're sending it? And how it gets sent, and they can turn it on or turn it off. So the customer's in control.
I want to give you the last word on the whole Bitcoin thing because, of course,
I'm not going to speak about Bitcoin. I could care less. You guys waste too much time about it. I'm not going to spend any of my time on it.
Warren Buffett said it's rat poison squared. Oh, well.
Whatever he said.